Hi there. I'm recording this in September of 2022. It's my view that we are on the brink or have already begun a market adjustment in the stock market. And if you disagree with me or not, this video still might be of interest to you because it is 100% about investing into rental properties, but in a very unique way. I interview Dustin Heiner. We are at a podcasting convention in Dallas, Texas. His business is successfully unemployed. Don't worry about that because all the links to the episode and the interview, my interview with him, are in the show notes. You can just click if you want to learn more. He has a free class on it, so don't worry about that. And it's interesting to me because I'm thinking about doing it myself. So can I buy rental property in a different state and pass it on to a property management company so that I'm not doing any work, using my money in a smart way, and then generating, albeit a small amount, but a little bit of passive income in which I'm only dedicating maybe a half an hour of my time a month. I know that sounds radical, but can I do it in a way that makes more sense considering market conditions now? Like prices are probably going to start coming down. Or is there a buying opportunity? How would it work? How does the cash flow work? Does that make sense? So if that's of interest to you, this is going to be a great video. I have to warn you, Dustin is intense, so it's like sipping water from a fire hydrant, but that's okay because you can click the link and take the masterclass that he's offering and whatnot. You can also check us out at boomx Academy, so that's boomx.biz, because we have classes on this, and all the podcast episodes I've done on the audio side and even the YouTube side is there. You can join for free and message me and ask any question you want. Hope you enjoy it, and let's get started.
Okay, welcome back. We have a great show. There's so much to talk about. I'm so excited. I'd like to introduce my guest. In fact, I'm going to have my guest introduce himself.
Yeah, my name is Dustin Heiner. I'm a real estate investor, and I was blessed to be able to quit my job when I'm 37 years old and not work a job because I bought real estate that makes me money every single month. That's how I'm able to afford my bills, and then was able to fire my boss and become successfully unemployed. I like that term. And with that, now I just get to go to the gym, hang out with my family, and come on podcasts and talk to great people like you. So
most of my listeners, by the way, have a different time horizon than you do, a time frame, because they are already retired. And I can tell you that the lion's share of them worked that career for 40 years. And now a lot of them have saved quite a bit of money. And the thing that interests me and how I can benefit my audience is to throw out the radical concept that it doesn't have to be what your financial advisor says for your IRA. And we'll talk about the law of self-directed IRAs here in a minute. But do you think that this is something a person could do in retirement who just doesn't really look at themselves as having that entrepreneurial zeal? Like your personality clearly has that. So what do you think?
Well, yes, I'll say two things. Totally, yes, 100%. And the second thing to add to that, I've coached many people who have already been retired. They say, I want to make sure that I have generational wealth that I could pass down to my kids. Not necessarily they need it right now, but they know that eventually they're going to pass on and they would love to be able to give something to their kids. And so I've literally coached hundreds, if not thousands of students now. And they start from, somebody wants to quit their job to they're already retired and they know that, hey man, inflation is going up. I need to start making more money somehow. And so I need to start having money coming in. So all the above. So 100% yes. But thinking about the entrepreneurial type of attitude, it is not necessary that you need an entrepreneurial attitude at all. It is risk tolerance. What it really comes down to is, what is your idea of risk? My idea of risk is giving somebody the ability to take away my ability to feed my family. So fast forward now, anybody and everybody can invest in real estate. It's really simple. Like, I'm not that smart. You're 100% smarter than me. And everybody else on your podcast, listen, is 100% smarter than me. I just figured this out. And Darol, this is so awesome. I love this. So I just said I'm not that smart, which I'll explain why. Numbers literally go in my brain and they flutter away. They disappear. It's just how my brain works. It's sad, but real estate investing is so simple. All it comes down to is addition, subtraction, and a little bit of multiplication. So addition, you add up all your expenses. So I do not buy a property if it's going to lose me money every single month in passive income. So I add up all my expenses, from your mortgage to your insurance to your taxes, vacancy factor, repairs, capital expenses, like all these things, we add all those up. And we do not buy the property unless we could rent it right then, the very, very first day that we take ownership of that property, we do not buy it unless we can make $250 or more in passive income. So in 2008, I bought my first property. No, 2006, I think. Bought my first property, started investing through 2008. The great thing about investing in real estate is that because I have been able to now buy properties and make sure that I'm making money every single month in passive income, whether the market goes up, whether the market goes down, or the market goes sideways, I still make money because I invest for passive income, not for appreciation. Back in 2008, when the crash happened, there were so many real estate investors that literally went bankrupt. I didn't. I made so much more money because that, like I said, it's addition, subtraction, and a little bit of multiplication. Add up all your expenses. Then you talk to your experts, your property manager, and say, how much can I rent it for? And if you could rent it for $250 or more in passive income, then you buy it. And then the multiplication is just a little, subtract the difference. Then the multiplication is super simple. If you could buy one property that makes you $250 a month in passive income, that's $3,000 a year without working. If you buy 10 properties, that's $2,500 a month in passive income, $30,000 a year without working. 20 properties, $5,000 a month, $60,000 a year without working. And it's a system that you need to put into place. And once you have this business built, you just buy more properties and put it into the business.
Okay, so let's do a shout out real fast because I don't want to forget. You're getting excited. You're talking very, very quickly. I love it. It's like sipping water from a fire hydrant, though. That's my style.
Yep.
Let's stop about what is the resource before we go any further. It sounds like you're also doing an online academy where my listeners can tap the brakes after this is over and say, okay, I want to learn about this before I jump into it. I'm assuming. Like, do you have templates and spreadsheets that they can figure out how to do it?
100%. In fact, I do coaching. I have group membership or courses and group coaching where I coach lots of people at one time. But even before you get in there, I want to give all your listeners a free real estate investing course. It will show you everything from building the business to buying the right properties, making money every single month. So if they text the word rental, RENTAL, rental to 33777. Rental to 33777. I'll give it to you. I'll show you how to find an area of the country to invest anywhere in the country. You can also go to masterpassiveincome.com. That's my website. /free course. Masterpassiveincome.com /free course. I'll literally give it to you. Show you how to build the business first, how to buy the right properties that make you $250 a month, how to scale your business so that they can also give it to their kids, quit your job, whatever it might be. And with that, what you're going to do is you're going to be able to make sure that you have a business that makes you money every single month in passive income. But yeah, text the word rental to 33777.
Okay, so I'm going to do that myself. So if you are a boomx listener and you're thinking about it, don't even scare yourself to say, like, this is something I want to do, because that might be too much of a leap for you right at this particular minute. Will concede and I will admit that I am interested in doing this for myself, but the idea of where I am in my life right now to actually go out and buy real estate, it's frightening to me, actually. Here's what I like about it. I can at least learn something for free. Mm-hmm. I'm going to invest in myself for sure. And I think my listeners, most of them are in the boomx Academy. They're already spending $44 a month for weekly office hours, and they're taking the courses and whatnot on topics related to asset protection. But this is a free course.
Totally.
Like, to get introduced to the idea. So at least for no other reason, just to have it in your data bank of conversation and financial and even legal literacy. You took the course and you know it now. Now, one thing that what I don't like about what's going on in the market today and in the retirement industry is financial advisors make money based upon assets under management. And so they have a built-in incentive to tell their clients stay in the market, even when there's an adjustment going on right now, right?
Yes.
Like, the stock market's down, like Bitcoin. The Bitcoin guys, they're like down 55%. And
they're still trying to tell you, go back into it.
I know.
So now what I do, though, because I've lost plenty of money in the stock market, I've lost plenty of money in crypto, but what I do not lose money in is my real estate investing. Because remember, what we're doing is we're creating a business that makes us money. Let me give you a quick example, because if you listen to my podcast, either my YouTube channel, anything like that, you'll hear me say this over and over and over again. We need to build the business first. Now, let me give you a quick example of what that means or what that looks like when you're investing in real estate. So if you're going to start a convenience store, candy bars, soda machines, and all that good stuff, you're not going to sign a lease on a location, open the doors, and set a box of candy bars in there on the ground. No, you wouldn't do that. You go out of business in 2 seconds. But what you would do is you would build the business first. You get the gondolas. Those are just shelving units that all the candy bars go on, countertops, cold storage, bank accounts, cash registers, employees, insurance, everything before you bought any inventory. Same thing with real estate investing. We build the entire business first, have experts that run the business for us, and then every property that we buy, that is a piece of inventory that you put into your business. That's how I was able to scale it so fast, because I had a business, and it's not that hard. Even though I keep saying it's a business, I'll show you, like, get my free course. I'll literally show you how to do it. But when you build that business, find the right experts. Zillow's not an expert. Trulia, Redfin, like all those websites, they're just databases. They're companies that are just trying to sell this information and get ads. This is what it looks like building a business. We find a good area of the country, anywhere in the country, that has good properties that we want to buy and that make us good money and passive income. Then we find the right property managers, the people to manage a property. It'd be like, if you find any property manager, it'd be like setting up your own convenience store, do all that work, and just grab somebody off the street and say, hey, you have a pulse, come manage my money, come manage my inventory, come manage my customers, come manage everything. No, you wouldn't do that. You would actually interview lots and lots of people before you pitch somebody. Same thing with real estate investing. Your property manager, that's your manager of your company. That's like the quarterback of your entire team. Then we make sure we get funding, right? Mortgage brokers to hard money lenders, private money lenders, all these different ways. I know I've literally done 14 different ways to get financing to buy properties. And then from there, we find handymen, contractors, insurance agents, like literally every single person in the business before we buy any properties, because they are the ones that are going to tell us, you're doing this right, you're doing this wrong, don't do that. If a property manager comes to you and says, I'm not going to manage that property, like after you bought it, because if you listen to the other quote unquote gurus out there that teach you how to invest in real estate, what they'll do is they'll say, find a property anywhere and you run the numbers. Basically, you make sure you make a little bit more money in passive income, like $50 or so. They might even say, you don't even need that. You get appreciation, which we don't invest for appreciation. I tell you that right now. I'm going to give these properties to my kids. So with that, you run the numbers, make sure you make a little bit of money in passive income. Then you spend thousands of dollars to buy the property, then spend thousands of dollars to fix up the property, and then you find a tenant to live in there, and then you find a property manager. In my opinion, that's just about backwards. What we do is we start with a city that has good inventory. Then we find the right property managers. This is what happens. I get a lot of students come to me, say, Dustin, I bought a house. I didn't know what I was doing, and I bought a house and I did everything the guru said, and then I went to find a property manager, and all the property manager said, I'm not going to manage that property. I'll get shot if I go there. You no longer have an asset anymore. You have a liability. So what we do is we build the business first, and the property managers, not your realtor. Your realtor just wants to make a sale. Now, if I insulted realtors, you just got to take it, because this is literally how it comes across, and I've talked with hundreds and hundreds, and my students have. If you look out for the best interest of the investor, that their long-term goal is to hold on to these properties and protect them to make sure that somebody's going to manage it, you're going to do so much better with investors like me. I buy properties off good realtors who actually give me good properties in good areas that make sure I'm going to make money. So quickly getting back to building the business, what we do is we build the business, and every property that we buy is a piece of inventory that we put into the business. And if we do this, it runs itself. I don't want to work at all. In fact, there's a book called The 4-Hour Work Week. I think working 4 hours a week would be good for most people, but I think it's also it's for suckers. I don't want to work 4 hours a week. I don't want to work 4 hours a month. I basically maybe work 30 minutes a month on all of my 30 plus properties, because I just grab the property management statements, make sure everything looks good, then put it away, because I've given my property managers business processes and systems and procedures to follow that they already follow. And I've already been doing it for 15 years now. And now I just go back to playing with my kids because I have everything running on its own.
Okay. The name of the podcast is BoomX Show, but the sub headline is Laws of Money. And so you and I are going to come up with a law of money related to your business, rental properties, that we can describe in one, possibly 2 sentences. And here's what I think it could be. Talk to me about the role of a real estate agent. Is there really a need for engagement with a real estate professional? Now, I understand the seller most likely has an agent, and most likely the commission that's being paid is coming from the seller. Is that correct?
Yes.
Right. So we're not really worried about it very much, really, because we're buying. One thing that bothers me is just, in a hot market, we should talk about the market, but that aside, let's just put that on the table, the back burner. Do we really have to worry about the contract or the transaction or the close, considering the fact that we're basically just using model forms?
You're getting on the right track and the right question. So with realtors, absolutely not. I bought so many properties without realtors. In fact, I prefer not using a realtor because I know, number one, I know what I'm doing. But if you really realize what a realtor does, all they do is pair up a buyer and a seller. That's really what they do. And they facilitate a contract, which you can do yourself. And all they do from there is they give it to a title company, which the buyer and seller pays the title company to do all the work the realtor's done. That's all they did. And so now, here's a tip for anybody that wants to save money and make money on top of when you buy the house. What we do is I work directly with the seller's realtor. I say, hey, seller's realtor, you're already getting 3% from them. How about instead of getting 3% from me, why don't I work with you as the buyer realtor? And from that, I'll give you 2.5%. Let me keep 0.5% so that I can repair. Usually they'll say yes, because they're getting 5.5%. Anyways, all that to say, realtors are just one way to find properties. I find properties through other investors, through title companies, my property manager, other investor groups. Realtors, they're a dime a dozen. And so I have so many different ways to find properties on top of using realtors.
Is the buyer obligated to pay a commission to the realtor?
No, but there is a buyer commission. If you want to buy a property, you can use your own personal buyer's realtor, but I usually don't unless a realtor brings it to me.
Right.
Which I have integrity. If they bring it to me, I'm like, great, you did a great job. Let me make sure that I buy it through you. But if I find it, I'm not going to go find a realtor to then represent me. No, I'm an investor. I know what I'm doing. And it's so easy to become a realtor. Like literally a school teacher. I'm not saying anything bad about this
a lot
process,
of realtors are school teachers.
Yeah, exactly. Like, oh, let me make a little bit of extra money being a realtor. It's so easy to do that.
Right. Okay. Now, how about this? Most of my students have pretty substantial retirement accounts. And one of the things I'm curious about is how am I going to finance this? Like what assets are the best assets to use to purchase in real estate? And can I use my retirement account to do that?
100%. So I'll give you a couple different examples of how to use a retirement account. So what I personally did, because I was like, 35 years old, 32, somewhere around there, I cashed out my entire retirement account because even with the taxes and penalties and stuff like that, I make so much more money in real estate, so I didn't care. It literally is like, oh, I just have to do that. It's silly for me for putting it in there and pull it out. That's one way. Another way is instead of pulling it all out at once, what I teach my students is two other great options. One, if you want to just pull it out, a little at a time per deal. Let's say you have $300,000 in your retirement account and you find a house that's maybe $120,000. Well, just pull out that little bit that, 120 to buy that house, then refinance it, cash out, get that cash back out because you used cash to buy it. Then you refinance that house because there's no note or no loan on it. Then you pull that cash back out and then you pay taxes or whatever it might be. The other way is a self-directed IRA that I think is fantastic, especially if you're getting really close to retirement age. Don't get that penalty and you're already hopefully making money. You have other ways to make money. Because I did this quitting my job. I needed to feed my family. So I needed that money right now. You might need it 3 or 4 years from now. You'd be like, I just want to do a self-directed IRA. And all that really means is you are the person making sure that money is being invested in a certain way. If you do a 401k, IRA, what they're going to do, you give it to somebody and they buy stocks, they buy mutual funds or whatever it might be. They buy other things. But with a self-directed IRA, you don't have to hire somebody to actually manage your money. You buy a property, it makes you money and passive income. Now, the whole caveat is you can't personally touch the money. It has to go back into that same account, that self-directed IRA account. It's just growing inside of there. So when you become the age to pull out, then you have that much more money that's tax-free, or obviously if it's a Roth. But what you've done is you utilize this to make sure that you're growing your wealth, and in the future, when you are able to retire, you have so much more money. So like with the stock market, I believe the stock market's going to keep going down. It's not looking very good. And so if you were able to cash it out right now or move it from the stocks, cash out the stocks, leave it in the IRA, then get a self-directed IRA where you move everything over and start buying real estate. Darryl, I got to say this because we can perceive that the real estate market's going to be pretty bad. Like right now it's rough, but it's been a seller's market and what's going to happen with interest rates and all that sort of stuff. I got to say, as an investor, I started investing back in 2006. I am so excited about this new change in what's going to happen in the market. I'm going to buy so many properties. Back in 2010 was the best time in recent history ever to buy real estate. Things were a fraction of what they should have been. I think in the next 1 to 2 years, it's going to start heading, I don't know if it's going to be as bad, but it's going to start heading in that direction where if you're ready, if you already have everything in place, the knowledge, let's say you have your self-directed IRA or you have funds or cash to be able to buy the property, you're going to make so much money investing in real estate. And the big thing is make sure you do it right. That's the big thing,
Right.
get education. But I am so excited for this next couple years for real estate investing.
Okay, so I'm assuming that what you're trying to say is the market's going to start flipping to a buyer's market. Is that
100%.
Oh, I got you. Okay.
Yes.
Gotcha. Okay. Now, so on the IRA thing, many of my listeners do not know, and they've never heard that the tax code does not disallow you from investing in anything except for life insurance policies, alcohol. You can't buy alcohol with your IRA. And if you're like, well, of course, in particular, what people were doing is they were buying wine collections that were in their wine cellar. Like, this is the IRA part of the wine. And the IRS is like, no. No, because there is a rule. You can't invest in real estate or life insurance. You can't invest in collectibles, some weird collectibles. You can't invest in alcohol. Other than that, I think that's the only thing that's prohibited. You can absolutely invest in anything with your IRA with some certain rules. I think this will be the law of money that we come up with, Dustin. But for example, I meant to ask you, when are you flying out?
Tomorrow morning.
Okay, so what are you doing tonight?
I don't have any plans.
Okay, so I'm going to make a pitch. The Seattle Seahawks are playing Dallas, 20 miles from here. Right? Now, I actually met a dude that bought and sold sporting event tickets with his IRA money.
Oh, wow.
Yeah. And I thought, okay, how's that going to work? As long as it's not a prohibited transaction, it's perfectly fine. It can't be like you can't sell your box seats, but it's just an asset. Anything that you can buy for price A and sell for price, that's an investment. And so real estate is allowed. You can purchase real estate with an IRA money. Now, the difficulty is the custodian plan administrator.
Yes.
And so let's talk about that for a minute. There's not, my knowledge is only like 3 or 4 in the country.
I know there are a number of them,
Oh,
but
okay.
one that I personally suggest my students use is Rocket Dollar. They've been really good for all of my students, and they handle everything. They say it's like a checkbook style IRA where you can write checks out because you have to pay expenses, pay your property manager, or whatever it might be, but you got to put that money back in. But I really like Rocket Dollar. They've been working out really well for my students.
Can you summarize the prohibited transaction rule if you know it for the listeners?
No, I don't know it. I just know that real estate investing is one that you can. It's not prohibited. But then Rocket Dollar, they will tell you. There's so many other, like you can invest in crypto with your self-directed IRA. Obviously, real estate, you can invest in other people's businesses too. You literally can't. There's so many other things. And like I said, Rocket Dollar, they actually have so much education because there's not a whole ton out there. And like you said, there's not a lot of companies doing this. So they try to educate their people very, very well.
So it's basically on autopilot in terms of the rules. Prohibited transactions orbit around this idea that you're not personally benefiting in a way that's inappropriate, that it has to be saved for retirement. And like retirement accounts have strict rules, number one, about its purpose, but number two, that you're not losing your IRA status because you did something wrong. And most the transactions that I've seen, the real estate isn't owned by a limited liability company. And that transactions, as we pointed out on the boomx Show Lives of Money podcast and in the Academy, changes the real estate or changes what you own from real estate to personal. Just by that transfer of real estate into a LLC, the law says, oh, you used to own dirt, now you own intangible personal property. It's very cool. It's like magic in just that one filing. And then the trust, the IRA, is actually the shareholder of the LLC.
Yes, it is.
Right?
Yes.
That's how you do it. And as long as you're not like renting out a spare bedroom in your own home, then you won't trip on the prohibited transactions. It sounds like Rocket
Dollar.
Rocket Dollar
Yes.
isn't going to let you do that anyway. So
They'll
that's awesome.
Definitely help you out through that. And the reason why we love using the Rocket Dollar, or just really the self-directed IRA, is we already have the goal of getting to that point. So what I love doing with my students, I love giving them all the different options that are out there. Because I'll give you a quick example of an option that you can do. So a lot of people think in order to buy a rental property, we need to find a realtor and a mortgage broker and put them together and buy a house. Well, that's just one way. There's so many other ways to do it. And so what I love to do is give all the options for my students. Everything from, I have 14 different ways that I've gotten financing to buy properties, how I can actually make money when I buy the property, make money while I'm own the property, how I can make money pulling cash out to actually buy the next property. There's so many different options out there. And so what I love doing with my students, I give them, hey, here are the options, here are the outcomes of what's going to happen, because I've literally done them all. And I've coached a lot of people how to do it as well. And so with that, the person, my student, they are the ones that have their own risk tolerances, their own goals, their own situations. And so they need to make the best decision. I just give them the big, broad picture of all the different ways, and they make the best decision. So if their best decision, what they want and their goal is to, hey, in 4 years, I can pull out my money. And so how can I grow it now in my self-directed IRA so I could then pull out in 4 years? Let's do that. Other students, I literally have students that are like, let's say 24 years old. And they're like, man, I have this IRA, I have $50,000 in there. I want to use it now and I want to make money from it now. I said, well, what I did is I cashed it all out and I bought properties with it. We can do that too. We could even use, here's another creative way. We could even use your home equity in your property, the home that you live in, to buy another property. I'll give you a quick example of what this looks like. So I have one student, he's a pastor in Sacramento, California. Doesn't make much money, but he owns a house and it's appreciated plenty. And so he has like a $200,000 equity, maybe even more, like $300,000. So I helped him to get a home equity line of credit on that house. Then he took that money, bought a house. So because we're an investor, we buy it for cheaper than it's worth. So they were asking like $120,000. We got it for $70,000, which is great. He put about $20,000 into it, got it rented, $90,000 total, and then had it reappraised and had it reappraised. It was $150,000 reappraisal. It's renting, it's making him money. So remember, he bought it with his home equity. So this new house doesn't have a mortgage. Now he has his home equity, he's paying on his own house, but now what we do is we refinance this rental property. Pull the cash back out, pay off your home equity line of credit. You're still making money on this first one, on this rental property. Your home equity line of credit is gone or it's paid down, and you have this property that's making you money in passive income, and you have all that money to do it all over again. So he's doing it over and over on a pastor's salary.
Man, that's amazing.
Building up his generational wealth.
That's leveraging money. That's owning your money. Having your money work for you. I love it. Listen, we need to wrap it up. Do not worry, boomx listeners. Everything that he said, all the links will be in the show notes. You can just click the button before. But in case you're in your car and we don't want you driving into the Mack truck in front of you, what was the website again? masterpassiveincome.com and /free course. All one word. Free course.
Yeah, /free course, all one word. I'll literally give it to you. I want to see you get started. So I have a podcast called Master Passive Income, which is just me teaching. I don't really do interviews. It's just solo, just teaching how to do this. And I've even, just yesterday, I got a message from a lady. She's, I don't know, maybe 30 years old. She said, Dustin, just from listening to your podcast, I bought my first property. We're in a contract and it's going to make us X amount of money in passive income. And people that get my course, the free course, I get messages all the time. Just because of your free course, I've got started investing. So I'll be completely honest, Darol. So I don't really necessarily need to do any of this because I have my real estate. This is how I make my money. Right. And all of this is just fun. Like hopefully it comes across like this is enjoyable for me. And then seeing my students buy their first property, it feels like I bought my first property all over again. And then them quitting their jobs, and because that's their goal, because other people have different goals, but their goal, some of them, are to quit their job. I get so much more. I'm like, I feel like I quit my job all over again. And so my goal is to make sure that all of my students, like we see their goal and we try to help them reach that goal with whatever risk tolerances and everything that they have. But when we do that, it changes everything. So yeah, I love talking about this. I have my YouTube channel, Master Passive Income. Same thing with a podcast, Master Passive Income as well.
If you're listening to the podcast version, you can't really actually see it. If you're in the YouTube version, he's like literally bouncing out of a chair. He's so excited about it. So I just had to make sure I got that on video. Man, it's been a pleasure having you on the show. You'll definitely come back. We've got a lot to talk about. And thank you so much.
Thank you, Darol. I appreciate it.
Okay. That's it for now. We'll see you next time on the boomx Show Laws of Money podcast.